And so I want to know what this, some more specifics on this. So we're going to watch a video about Saudi Arabia's economic crisis.
To you by ground news. Even before the recent decline in oil prices, Vision 2030, Saudi Arabia's ambitious plan to diversify its economy away from oil via a series of eye-catching mega projects, wasn't...
Wait, let's look at it again. Whoa. Billions of bets in the gaming industry, billions of bets in the sports industry, billions of bets on building Neom and Eco-City and the line. Yeah, I think Neom is the line, huh? But they also built that gigantic square in Riyadh, the cube.
Wasn't exactly going to plan. Costs were overrunning, foreign investment was drying up, and the kingdom was running chronic deficits. However, the post-Liberation Day crash in prices has made things markedly worse. And on Tuesday, the Saudi Finance Ministry quietly admitted that they had borrowed more in the first quarter of 2025 than ever before. So in this video, we're going to explain the recent crash in oil prices, how it fits into the...
I mean, I respect them trying to be more like America by borrowing absurd amount of money they can't pay back. I guess more like every goddamn country in the world, really. Well, I don't know why I'm isolating us. Everyone's fucking doing it. Just fucking whatever you want, borrow for it.
The Saudis' $100 a barrel project, and what this ultimately means for the Saudi economy.
Everyone? Yes, China. China is indeed borrowing like fucking crazy. China has about the same debt. I mean, if you do total debt combined, like state plus government, China's like 300% debt to GDP. Norway isn't. All right. But not every country is a relatively small, homogenous, oil producing nation. Very, very small group. Most countries are fucking borrowing. All right. They have fucking things they got to build or do. Ain't Norway.
If you're a TLDR fan and want to support the channel, then consider picking up a copy of our magazine. Too Long helps to fund all of our journalism and allows us to make free videos on YouTube like this one. You can learn more and buy a copy by clicking a link in the description. So to understand this story, you need a bit of context. As one of the world's largest oil producers and its largest exporter, Saudi Arabia's economy is dominated by oil. In fact, the oil sector accounts for roughly 90% of export earnings, 80% of state budget revenues, and 40% of GDP. Although much of that remaining 60% of GDP is in some way dependent on the kingdom spending its oil revenues.
Yeah.
While this might sound great, after all, who would say no to billions of dollars in oil revenues? This dependence on oil creates both political...
Me, I guess. I guess I'm just brave like that. I'd say nah. It's not about the money for me. I would still drill the oil, pump the oil, and sell the oil. I just wouldn't do it for the money. I still want everyone to use oil. I just don't want to make any money off it. I think I do it for the love of the game. Do you know what I'm saying? It's the happiness of drilling.
and economic problems for the kingdom. Politically, it's a problem because oil alone just can't provide enough jobs to keep the growing Saudi population employed, and creates a vast inequality between those in oil and non-oil sectors.
Right.
So in order to keep the unemployment rate down to politically palatable levels, the government has to basically make up jobs, which is why something like 2/3 of working Saudis are employed by the public sector. Economically, this is a problem because this dependence on oil undermines the competitiveness of Saudi Arabia's other export sectors via a phenomenon known as Dutch disease. And it just won't be...
What percentage of Norway is public versus private? I'm interested. What percentage of Norway jobs are public versus private? Because I feel like Norway is almost the same thing. I feel like Norway makes a fuck ton of money off natural resources, and then everyone has a job with the government. What percent of Norway jobs are public? They are the OECD country with the largest share of public employment. It is 31%. The average of other OECD countries is 18%. All right, so it's not a majority, but it's a lot. It's a lot. A third of all jobs are government funded, which is provided by oil.
Sustainable if oil demand declines in the coming decades. Even if demand persists, a dependence would still leave the economy at the mercy of oil price cycles, which would become increasingly volatile, making any rational economic planning pretty much impossible. To give you a sense of quite how volatile prices have been in recent decades, consider that between 2007 and 2011, oil prices doubled, halved, then doubled again before plummeting to unprecedented lows in 2014 and
dude, oil is the original crypto, dude. It's a fun ride. You could make some, you could just fucking, we should all be buying barrels, dude. We should be fucking Robin Hooding oil barrels to make some real fucking cash. We should be hodling.
Briefly going negative in 2020. Anyway, to remedy these problems, in 2016, the kingdom's de facto leader, Crown Prince Mohammed bin Salman, announced Vision 2030, an ambitious plan to reduce the kingdom's dependence on oil by developing its non-oil economy.
Dude, it's so funny. Maybe he's going to say this. I shouldn't say it, but I want to say it in a funny way. It's like, hey, our whole economy is oil. So let's take some of our oil money and invest in smart, future-forward things. How about fucking esports? How about a dumb esports tournament? How about we buy a bunch of sports teams and overpay for all the players? How about we invest in the worst tech company startups of all time? How about we give $100 million to fucking, actually $100 billion to Masayoshi-san so we can punt it on WeWork? That's how we leverage our future of this great nation.
In practice, this basically involved doing two things simultaneously. One, developing Saudi Arabia's export-led industry.
They're investing like their teen boys buying all their favorite things. No, but literally. No, but not as a joke. Though their investment strategy reads like fucking rich teen boys with infinite money being able to just buy what they think. Yeah, I need a soccer team. I'm gonna drastically overpay for it. We're gonna build a league. Drastically overpay for it. We're gonna build an esports tournament. Drastically overpay for it. We need some cool tech stocks. Drastically overpay for it. It's crazy, and that's the future of the. That's what the post-oil economy is supposed to be, and it's all these bets by.
Industries like tourism, mining, and manufacturing to the point where they're internationally competitive and don't need to be subsidized by oil revenues. And two, developing Saudi Arabia's domestic economy to increase domestic demand and reduce imports by doing stuff like investing in education, building infrastructure, and providing cheap loans to small businesses. Now, this was always ambitious. Most oil exporting countries have struggled to break their oil habits, and those that have, most notably Norway, have achieved this by investing their oil revenues.
Can we get an email called Snorway that we can spam whenever Norway tries to brag about something? I'm sick of it, dude. I'm snoozing. I'm snoozing at Snorway. Like, we get it, but it's still cold, okay? It's still fucking cold up there.
Over long periods of time.
You still have, like, these long winters. You still have, like, the dark. You have seasonal depression.
The timeline outlined by Vision 2030, however, is remarkably short. By 2030, MBS wants the private sector to account for 65% of GDP, with half of that coming from SMEs, non-oil products to account for 50% of all exports, and renewables to generate 50% of the country's electricity.
Bro is dreaming.
Getting there this quickly was always going to be expensive, which is why, after the pandemic, the Saudis decided that they wanted to push the price of oil up to $100 a barrel in order to make sure that they have enough cash in the bank. This was also pretty ambitious. After all, oil traded at around $60 per barrel from 2015 until the pandemic. But the Saudis were optimistic that they could achieve this because of OPEC+, the expanded cartel of oil-producing states that now includes both Russia and Saudi Arabia, and thus has massive sway over global prices. Unfortunately, though, this plan didn't really work, and prices settled at around $80.
Nah, I really want to go into this because it's fucking fascinating. Okay, so look. OPEC is a cartel, right? They get all these oil countries to team up and choose to voluntarily export less oil so they can keep the price high. The idea is that they all compete, it'll drive down the price of oil and they won't make as much money. But if they all agree to only voluntarily do a few million barrels each or whatever, then they can all make more money. And one of the things they did around this time period, this 2015 to 2024 time period, was the United States started to get into shale and fracking, okay? And the shale revolution, where the Permian Basin in Texas started to add a full Saudi Arabia of oil output. Sorry, Saudi Arabia of oil output. I'm circling India. A full Saudi Arabia oil output, okay? That was the plan. But then Saudi Arabia is like, okay, OPEC, here's what we got to do. Here's what we got to fucking do. We're going to all team up to voluntarily cut our exports to drive, actually, no, sorry, opposite. We're going to team up to mass produce oil to drive down the price so it drives these companies out of business so they can't be profitable. That was the plan. So between those years, they voluntarily extra exported. Like they drove down the price of oil on purpose to try and make this non-productive. And it didn't work. For whatever fucking reason, U.S. shale did not die. Even though it was not making any money, it just barely hung on. And then as it hung on, it kept growing. And now the United States has so much oil output, like, again, a full Saudi Arabia added, that it's kind of breaking OPEC. It's like, it literally is an under-discussed story because it mostly happened, like the real breaking happened. Again, this happened over many presidents, but the result of it happened during Biden, and Biden did not want to talk about his victories in the oil market or like how much oil we were pumping because it's not a Democrat talking point. So it's under discussed, but it is a big deal that like OPEC's power has been dramatically reduced since COVID, largely because of advances in things like shale and fracking. And because some of these OPEC member states have gotten antsy and started to like skirt the rules a little bit of the cartel.
Unfortunately, though, this plan didn't really work, and prices settled at around $80 after the pandemic. This was in part due to a raise in non-OPEC production, including from Canada, Brazil, Guyana, and the US via shale. But it was also because the Biden administration started releasing oil from the US's strategic petroleum reserve when prices got too high. This caused immense frustration within OPEC+, and members started resisting further cuts. Angola actually quit the cartel last year, and it's become clear that some of its members, most notably Iraq, Kazakhstan, and the UAE, were pumping more oil than they were supposed to.
Yeah, they were cheating. Oh, that's great. Yeah, perfect example. So again, as the cartel started trying to control prices by telling people what they could pump, and it wasn't working, they got desperate. And so all these OPEC Plus members started being like, okay, we're going to sneakily, because everybody has their own individual incentive. If they're like, hey, everybody, we're not going to pump oil to make the price up, but then you secretly do, you make a huge profit. So everybody at OPEC has an incentive to cheat the system of OPEC while hoping everybody else follows the rules. And it's actually been kind of like breaking down because of they have lost their control over. It's very interesting. Like this whole story is very interesting.
This caused deep frustration in Saudi Arabia and forced the kingdom to unilaterally cut production by 2 million barrels a day in order to keep global prices high, bringing Saudi output down to its lowest level since 2011.
Yeah, prisoner's dilemma, yeah.
This also meant essentially accepting lower revenues in the short term, despite the fact that the Saudi budget was already coming under strain from the cost of MBS's Vision 2030 megaprojects, like the Neom Line City and the new Saudi Football League. This caused government spending to surge, the Saudis to start running a chronic budget deficit, and the all-important break-even price, i.e. the price that oil is required to be for the Saudis to balance their budget, to rise to about $110 per barrel, according to Bloomberg Economics. This is why the recent crash in oil prices, which have now fallen to around $60 per barrel, looks so tough for the kingdom.
Yeah.
The immediate cause of the crash was Trump's Liberation Day, which dampened demand forecasts. But it's been exacerbated by the fact that the Saudis have...
By the way, also worth saying, this crash in oil prices directly harms Russia. It makes Russia and their aggression in Ukraine much harder to sustain. So much of what funds the Russian war machine is higher priced oil. In fact, I saw an extremely convincing mathematical argument that showed that one of the worst things we did to hurt Russia was sanction their oil right around here. Because all that did was drive up the price of oil, which they then sold on the black market or to China and made more money anyway. And in fact, you could make the argument that the best way to hurt Russia in the war would be to have U.S. ships escort Russian tankers to their destination to basically help them sell as much oil as they want. Because it literally would actually drive down the price of oil on the open market and hurt their ability to fund their fund. It's like, the way this whole thing works is just very interesting. The way commerce plays out, the way sanctions play out is very interesting, especially if some country as big as Russia has a buyer like China or India. Like you can sanction a small country for sure on oil if you have enough market power, but a big one, you really can't. They will always find a buyer. And so it actually was weird how it ended up driving it up. Anyway, now that that's kind of changing and the oil price is crashing, it's hurting all the oil-based economies.
Day, which dampened demand forecasts, but it's been exacerbated by the fact that the Saudis have started to unwind some of the voluntary cuts that we mentioned a moment ago, a tacit admission that their $100 a barrel policy has failed. If prices stay here, Goldman Sachs estimates that the kingdom will run a $67 billion budget deficit this year.
That's nothing.
Well over double.
Just to be clear, we do that in a day. Get on our fucking level, Saudi Arabia. That's not even, we do that in a day.
The government's current forecast. This might even be an underestimate, because on Tuesday, the Saudi Finance Ministry quietly admitted that the kingdom had borrowed an unprecedented $30 billion in just the first quarter of 2025, the highest quarterly figure on record. If the kingdom continued to borrow at this rate, this would imply an annual deficit of about $120 billion this year, or about 11% of GDP, which would be one of the highest in the world.
Okay, that's actually fucking crazy high percentage-wise. Holy God.
Now, to be clear, the kingdom does still have enormous cash.
The U.S. is running about a 6-7% budget deficit of GDP, which is World War II levels. Just to be clear, it's World War II levels. 6 to 7% of our GDP is in deficit. Yeah, we have a deficit as the size of, not 67. But that is World War II level of deficit GDP. It's not a good number, but it's crazy to have 11.
Cash reserves, and its debt to GDP ratio is around 30%, well below most equivalent economies. Nonetheless, even if there's no immediate risk of default, although the cost of insuring Saudi debt against default is at the highest level it's been since 2020, the kingdom will still be wary of eating too far into its foreign exchange reserves, which are mainly used for pegging the Saudis' rial to the US dollar.
What?
And structurally lower oil prices will also force MBS to
buy me a barrel of oil before you peg me. GG, Saudi's going to have to sell Ronaldo back. Bro, not even a joke. This oil price keeps falling. The soccer team's not holding up, dude. The price does not make sense.
Dramatically scale back his Vision 2030 plans. Enthusiasm for Vision 2030 is also waning. Lots of big projects like NEOM have suffered recurring delays and reviews, and foreign investment seems to be drying up. The risk for MBS here is that if oil prices stay low, then he'll have to pare back Vision 2030 so far that it becomes unrecognizable, and the kingdom will lapse back into a total reliance on oil. But understanding how Saudi Arabia and OPEC really plan to manage oil prices isn't an easy topic, and as such, there's plenty to read about it online, with 184 sources reporting on the recent cuts to production. The issue is, how can you be sure that what you're reading here isn't hugely biased?
That's an ad for Ground News. That's an ad for Ground News. No, but I mean, if you knew that, if you could figure out what OPEC is planning next to try and get oil prices up, that's fascinating. I want to read more about it. I would love to know who's got speculation on that, because it underpins a lot of other things. Like, again, some of what Iran does with funding other organizations is trying to cause chaos that drives the oil price up, because that's where all their money comes from.